Hello everyone, welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. You can get in touch with me through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. You can post questions, comments, and content related to the topics on my presentation and the topics for the channel that I'll go through in just a moment. I'm also on X. My name there is @DougPless. Here are the key tenets to my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. And that certainly applies to large cap tech stocks like the Magnificent Seven stocks, as well as equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers will take the opposite side of those trades and they hedge their delta exposure with ES futures. And we'll certainly see an example of this next week as the current June contract expires and the September contract becomes the front month contract. So the ES contract that everyone is trading now will cease to exist a week from Friday. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first step is planning. I use positional analysis. I look at how traders are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range of volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis. And for setups, and when I talk about setups, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Here's my agenda for today, Wednesday, June 11th. First of all, I want to go over news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups earlier today so we can get a sense of what traders have been doing to get up to this point in the day. And then I'll take a look at the live market. And when I got to the live market, if anyone has any stocks or anything else they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started. First of all, with news items, economic data, and events. So the key data release for today as well as this week was the CPI data that came out at 8:30 a.m. Eastern Time. And there are 4 different CPI metrics, month over month, year over year, actual and core. And for the most part, this data came in line or lower than expected. And we'll see how the market reacted to that. So let's go to the S&P 500 futures. This is the ES futures and Bookmap. And there's the reaction to the 8:30 a.m. Data release, CPI. Market very happy about that. Traded up to around SPY 606 and this SPX level, this combo 1 level. And also, it looks like the bid-ask line went up to the ES upper weekly expected move, and then spent about the next hour and 15 minutes giving most of that back. Most of that was during the pre-market session. And then the market rallied after that. All right, so that was the reaction to the news, a big sharp spike in price, then a grind lower. All right, upcoming for the rest of the week. And there have been more news items today that have moved the market with the China U.S.-China tariff talks and other news. All right, so upcoming for the rest of the week. Tomorrow, PPI data comes out at 8:30 a.m. Eastern Time. Then at 10 a.m., Michigan Consumer Sentiment. That's on Friday, 10 a.m., Michigan Consumer Sentiment to wrap up the week. All right, so that is the news for the week. Interesting reaction to the CPI data. All right, so let's take a look at the levels on this chart. Let's move on to positional analysis. This is the, again, ES futures and Bookmap. Before I take a closer look at this chart, I want to take a look at a higher time frame. I'm going to go to the SPX, the underlying index. This is a 1-year, 1-day chart. Note SPX has rallied about 25% off this early April low, which was the low of the reaction to the April 2nd Liberation Day tariff announcement. More recent price action, gap up. This is the May 12th gap up after the China tariffs were paused for 90 days. There was a kind of a truce between the U.S. and China. And then a low was, this is the most recent swing low at 523. And the strong rally continues after that low. So that is a, hello, Stephen. Welcome. Glad you're here. All right, so let's take a look at a 30-day 1-hour chart now so we can focus on more recent price action. All right, I've zoomed in a little bit on this chart. So it's a little bit less than 30 days, but this is a 1-hour chart in Thinkorswim. There's that May 12th gap. And then 523 low, didn't close the gap, and then a rally from there. SPX continues to make a series of higher lows. And note, most recent price action last Friday, SPX broke out above the key 6,000 level. And then Monday this week found support at that level, also today, and then rally continues. All right, let's take a look at the levels on this chart. I'm going to start with the expected moves. So the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place for the entire week. And SPX trading inside that range. Dashed blue lines are showing the lower and upper daily expected move, also based on the options market. That's based on the closing price for SPX from yesterday. And I do post those levels in Discord every day the evening before. So SPX trading within that range as well, kind of right in the middle of that range. All right, let's take a look at the spot gamma levels on this chart. These are based on gamma-weighted open interest that provided to Spotgamma subscribers, available on a wide variety of trading platforms. Again, this is Thinkorswim. I'm going to point out the key daily levels. First of all, the put wall is at 59.75. That's a strike with large net negative gamma that can be expected to act as support. So that's 59.75. Just above that is the volatility trigger at 59.95. Based on Spotgamma's older model, this is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to ensure delta exposure that tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And we'll take a look at gamma in just a few minutes based on the newer synthetic open interest model. And we'll see that SPX, according to that model, is still a negative gamma. All right, so the next level up is the absolute gamma strike. That's just above the volatility trigger there, that's 6,000. That's the strike with large absolute positive and negative gamma. And then finally, the call wall is up at 6,100. That's a strike with a large net positive gamma that can be expected to act as resistance. So that is the next major level up above. All right, those levels all remain unchanged from yesterday. There were no changes in the Spotgamma key daily levels from yesterday. Note this 6,066 combo 1 level. We saw that was in play before the cash open, so it's not going to show up on this chart since this only shows regular trading hours. SPX only trades during regular trading hours, even though we have access to those levels before the cash open. All right, let's wrap up our view of SPX with a 1-minute chart. All right, so starting with last Friday, that's shown here. Two levels in play, the 59.95, and that's the volatility trigger right now, and then 6,000 absolute gamma strike. Price chopped up and down around those levels last Friday. Found support at 59.95 on Monday, then support at 6,000. This is on Monday. And then SPX did a retest of the 6,000 level on Tuesday, yesterday, and then the rally continues. And it steepened yesterday afternoon. Now it looks like that trend was broken. Steep uptrend line was broken earlier today, but the rally does continue. All right, back to Bookmap. So again, key levels in play. There's that 6,066 combo 1 level, and then the SPY 606 level just above that. And this is the SPX 6,050 level. That is not an official Spotgamma level. I am showing it in white, but price has traded up and down around that level. And the point of control shown here may be difficult to see. Point of control shown here is just above that level. That dark purple line, solid purple line, is the point of control. All right, on the downside, SPX 6,025. And note there's a difference in price between ES and SPX, and today is right around 5 points. So ES minus SPX, that offset is 5 points. So I'm showing SPX 6,050 at ES 6,055. And note with the rollover, so on Monday, I will be trading the new contract, the September contract, and that ES to SPX offset will widen pretty substantially. I guess it could be up to 60 points. So ES minus SPX on Monday, maybe closer to 60 points as the cost of carry comes in again with that new 3-month contract. All right, so that's the S&P 500. And for SPY, so again, SPX, there were no shifts in levels from yesterday. For SPY, the volatility trigger shifted higher, put wall lower, and call wall shifted higher. So the call wall now for SPY is more in line with the call wall for SPX. Call wall 6,100 for SPX, 610 for SPY. All right, we'll get to setups and then current price action in just a couple of minutes. Let's take a quick look at NASDAQ. NASDAQ, NDX levels, definitely in play for today, as well as QQQ levels. So let's take a look at that. So this is the NQ Futures and Bookmap. And I have NDX levels and QQQ levels, as well as key round number levels for NDX and QQQ on this chart. All right, so let's take a look at the underlying index charts. I'm going to start with QQQ. Levels in play. Right here in the middle of the chart. 2 QQQ levels, the 535 large gamma 4 level, and then a combo level just below that. And then this is another combo level up above, 536.01. And earlier today, the QQQ 533 level acted as support. All right, let's take a look at NDX. NDX levels more important today. Right at the cash open, the 22,000 large gamma 2 level acted as resistance, and just a few minutes after that, 21,900 level. That's a large gamma 4 level, acted as support. And then price moved up to this 22,038 level, which is the combo 1 level. And then price found support again at the 21,900 level. So NDX levels keep key support and resistance for NASDAQ today. So back to NQ futures. So you can see those levels on this chart. Support, resistance, then support again. With price moving up and down around these 2 QQQ levels. All right, shifts in levels for NASDAQ, pretty minor. For NDX, the put wall shifted lower, and for QQQ, the put wall shifted higher. All right, so that's NASDAQ. All right, let's wrap up our positional analysis by taking a look at Gamma. So back, take a quick look at Gamma. And this is based on the Spotgamma older model, what they call the naive model, but I like to take a look at this for reference since I've looked at it for so many years. This is market maker's position on the Gamma curve at the beginning of the day for the S&P 500, NASDAQ, Russell 2000. Note all these numbers are positive. So again, this is for the S&P 500, NASDAQ, Russell 2000. All these numbers are positive. And again, according to the naive model, Spotgamma's naive model, the assumption is that traders are long puts and short calls, so market makers are long calls, hence the positive gamma, and they have to trade against price edge or delta exposure. All right, let's take a current look at Gamma. And this is the trace model. This is for SPX. This is based on their newer synthetic open interest model. It is available to Spotgamma subscribers. Red shading indicates negative gamma, and blue shading indicates positive gamma. All right, so note the mild red shading with the current price action showing that, according to this model, SPX is trading in negative gamma, and there is strong positive gamma support below between 5950 and 6000, and those also down below the large positive gamma at 5905. That is the JP Morgan short call for the JP Morgan fund that uses a collar to protect their stock portfolio. So that call is deep in the money. All right, let's move on. Let's take a look at some setups now. And I'm going to start with the SP 500. And as always, I'm going to start by taking a look at what options traders have been doing today. So this is the hero signal. This is available to Spotgamma subscribers. And this is for the S&P 500. This is the S&P 500 index signal. So what the chart is showing, the white line is price for SPX, and the purple line is the hero signal for the S&P 500 index components. That's SPX, SPY, ES, and XSP. A rising hero signal indicates traders are taking, A rising hero signal indicates traders are taking positive delta options positions. When they take positive delta options positions, buying calls and or selling puts, market makers take the opposite side of those trades and they hedge their delta exposure by buying ES futures. And then a falling hero signal indicates traders are taking negative delta options positions. They are buying puts and or selling calls. Again, market makers take the opposite side of those trades and they hedge their delta exposure by selling ES futures. And note, the index hero signal for the index components is negative for the day. And that has not happened in a while. It's about negative 2 billion. And we'll take a closer look at this in just a couple of minutes. So there have been, based on this, a couple of good setups this morning. First of long, somewhere between 945 and 950. And again, we're looking at the total signal here. The flow alerts, 2 timely flow alerts. It came in right before this shift higher. And frankly, it looks like price shifted higher first and options traders were chasing. That really doesn't matter, no matter when the options traders come in. When they're taking positive delta positions, market makers take the opposite side again, and they have to buy ES futures. So that just fuels that move higher. So flow alert signals significant options activity and can often act as an indicator of a reverse in hedging flow from positive delta to negative delta, or vice versa. That's what happened here, negative delta to positive delta. And then another flow alert came in, again signaling significant options activity and a potential reversal in hedging flow. Again, that's what happened about 10 minutes later with this peak pattern. Traders started taking negative delta options positions, and that happened maybe 35 minutes or so before this news came out. This was at 11:08. Commerce Secretary Howard Lutnick said the China tariff levels are not going to change. and that caused a brief negative reaction. But the options traders were already taking negative delta options positions. Let's take a look at the other signal for the S&P 500. This is the equity signal showing options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. And again, shifts in hedging flow at about the same points. Again, it looks like the options traders are chasing a little bit there. And instead of reversing, the options traders just took their foot off the gas. All right, I'm going to shift to puts and calls, and I'm going to go back to the index signal so we can add a little bit more clarity. All right, so this is gives us a better look of what was happening this morning in the index component, which I think provided a more clear signal today. All right, so this blue line is showing puts, and a falling blue line indicates traders are buying puts from the open. And that is bearish when traders buy puts, and traders started buying calls right around 950. Price moved up, and they took the foot off the gas somewhere between 1025 and 1030. And again, they did that before that sharp drop. So as of right now, the call buyers have stopped, and traders continue to buy puts. So you can see the delta notional value here at minus 3.72 is pretty large. Traders buying puts. All right, let's take a look at Bookmap now. Let's go back to ES. I'm going to zoom in. So we'll zoom in from about 9:30 to 12:30. All right, so what we know from the options market, we'll just stick mainly with the index signal. Traders started buying calls as price moved up right after 9:45, and they took the foot off the gas. They continued to buy puts. All right, so it looks like it was really aggressive buyers starting to move this higher. You can see the magenta dots show market buy minus sell. Magenta volume dots indicate market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. Buyers came in. Price moved higher, consolidated, found support right around VWAP, moved up to the SPY 605 level, and the heat map and Bookmap is showing some passive sellers up above. Limit sell orders. Let me darken up the heat map just a little bit. So you can see limit sell orders up above the SPY 605 level, right around ES 6065. So we know the call buyers took the foot off the gas. Traders continue to buy puts. News breaks, 1108. Aggressive sellers take ES down lower. A little bit of a pullback. And then the downtrend continues as traders continue to buy puts. And the call buyers have left the building. All right, so that was the long and short setup this morning for the S&P 500. Let's take a look at NASDAQ. Again, remember the key turning points in NASDAQ today, the NDX levels, and then the QQQ levels in the middle. Let's see what options traders are doing. And I'm going to shift back to the total signal. So just like the S&P 500, there are two hero signals that we can take a look at. For NASDAQ, the first is the index signal, showing options trades and market maker hedging activity. For the NQ index components, that's NDX and QQQ. So it looks like this reversal just after 9:45 was a little bit more timely, lining up more closely with the reversal in price action. Again, at that 21,900 level on NDX. Options traders stop taking negative delta positions, start taking positive delta positions. NASDAQ reverses higher. Peak came in just after, well, actually, right around 10:50. First peak. Options traders take the foot off the gas and they start taking negative delta positions. It looks like maybe just a moment or two before the news came out, and they continue to take negative delta options positions. And this is pretty large, negative delta notional for the NASDAQ. So pretty strong correlation between options trades, market maker hedging activity, and price action in the NASDAQ. Price here is for NDX. So again, this is the index signal for NASDAQ. Then we can take a look at the MAG 7 signal. This is showing options trades, market maker hedging activity for the stocks known as the Magnificent Seven. That's Apple, Amazon, Google, Meta, Microsoft, NVIDIA, Tesla. Let's take a quick look and see how those stocks are doing today. So I've got this chart in Thinkorswim. Let's take a look at that. So Apple moving lower, Amazon moving lower, Google, Meta also moving lower. Microsoft, kind of an exception today. Bullish opening drive. We'll take a look at that in just a few minutes. NVIDIA and Tesla also moving lower. And then Palantir over on the lower right, now starting to move down. So when those 7 plus Palantir stocks move lower, the indexes are definitely going to move lower since they make up such a large component of the NASDAQ and the Russell 2000. S&P 500, I'm sorry. S&P 500 and NASDAQ. All right, so that's the indexes. Let's go back to Bookmap. So again, NASDAQ pinging between those key NDX levels and now has broken down below the 21,900 level that acted as support earlier today. So it appears, at least for today, that the dip buyers have left the building. And note in the subchart here, all three lines moving lower for most of the day. Now so let's take a look. First of all, the dark blue line that has shifted to magenta now, that's cumulative volume delta. That has been moving down since the cash open. The yellow line is showing stop orders, and a falling yellow line indicates sell stop orders, helping to fuel that move lower. And then the blue line, light blue line, is showing iceberg orders. So earlier today that was moving lower, and as price is moving higher, very typical action of large traders with iceberg orders they use to hide their size, they will fade that move. So as price was moving higher, large traders were selling with iceberg orders. Then as price started to move lower, traders are buying with iceberg orders, again fueling the move higher. And then they took the foot off the gas, and now they have started to buy this move lower. And now NASDAQ moving down to this next NDX level, combo 3 level at 21,820. All right, that's NASDAQ. Let's take a quick look at some stocks, and then let's get to the live market. It's really moving today. All right, so stocks I want to take a look at. First of all, Apple. All right, Apple very bearish today. Bearish opening drive. And let's take a look. See what options traders have been doing in Apple. Let's go shift to puts and calls. Go to Apple. And you can see call sellers have been driving price lower all day. And there have been some put buyers as well. Blue line showing some put buyers, very gradual grind lower. Very nice call peak just before 940. That is very reliable bearish reversal pattern. And traders start selling calls. And this key level today, 200. Apple did find support around that level earlier today, and now is broken down below that level, maybe finding a resistance at that level. So 200 is the hedge wall, key gamma strike, and put wall. So 3 of the 4 key daily levels at 200. All right, so let's take a look at Apple. There's that call peak reversal pattern. Right at 204.50. Price breaks below VWAP, that light blue line. Note the liquidity at the 200 hedge wall, key gamma strike, put wall level. Those were limit buy orders in the order book. Those were consumed. Price did chop around that level, but found support. Now moving back down below. Now it looks like that 200 level acting as resistance. So Apple has broken down below the 200 level as traders continue to sell calls and buy puts. All right, next stock I want to take a look at is Microsoft. Remember the bullish opening drive this morning up to the 475 call wall. So Apple moved down to its 200 put wall. Microsoft moved up 2 hits, 475 call wall. Again, you can see liquidity in the order book, very typical of stocks. These were limit sell orders since they were above price, and this is very typical of stock traders. They will keep those orders in the order book until they're filled, and that's exactly what happened. Looks like some more orders came in after that first test of 475, and then price reversed lower. We'll see what options traders are doing. So let's go back to Hero, go to Microsoft. So Microsoft, very bullish opening drive. Whoops. Having trouble with my pen tool today. Very bullish opening drive. Call buyers and put sellers. So that's bullish opening drive, bullish momentum when both the blue line and orange line are moving in the same direction. A very prominent peak pattern at the 475 call wall. Again, remember, very reliable bearish reversal pattern. Also note the flow alert that came in just after the open, signaling significant options activity. And that's exactly what happened with the big rally at Microsoft. And then the call buyers and put sellers took the foot off the gas. And Microsoft consolidating, now starting to move lower with the rest of the market as traders have started buying calls, buying puts, and selling calls. After that, afternoon test of the 475 call wall. All right, so Microsoft, it looks like joining the move down. Let's take a look at Tesla. Zoom in a bit. Net bearish for the day. A little bit of a choppy pattern this morning, but it was a bearish opening drive. Traders selling calls and buying puts. Then call buyers came in, call peak, and then price move lower again. Zoom out. So now traders continue to buy puts and sell calls. Tesla continues to move lower. So again, bearish opening drive, reversal higher, call peak pattern, and then price move lower. Oh boy, welcome, glad you're here. Ask SPX possible pin today. Yeah, we'll take a look at that. We'll take a look at Charm. Just a couple of minutes. I've got one more stock to take a look at, and then we'll get back to the indexes. So let's go to Bookmap. Go to Tesla. All right, so there's that choppy, bearish opening drive. Again, I can't seem to grab the right pin tool. So bearish opening drive, reversal higher, call peak, price moves lower, and now at lows of the day, right around 325. And liquidity again at the round numbers, more liquidity typically at the zeros and the fives, but these round number levels typically make up very good targets for price. All right, so there's Tesla. Last stock I want to take a look at is Palantir. So we've taken a look at two bullish stocks, two bearish stocks. So here's the other bullish stock. Bearish, Apple and Tesla. Bullish, Microsoft and Palantir. Let's see what options traders are doing. And we'll see with Palantir that it looks like options traders are chasing. So note price starts to move up just after 10 a.m., breaks this downtrend, starts to move up, and then about 10 minutes later, the call buyers come in. Call buyers take the foot off the gas, price consolidates after that. Let's go back to Palantir. So you can see the ramp up in cumulative volume delta here as aggressive buyers start to take Palantir higher after that trend break, reversal right at 134. And that is just about as straight a line as you can find in price action, right up to the liquidity at 139, call wall up at 140. Very nice price action in Palantir today. So cumulative volume delta rising. So both the options traders and aggressive buyers have taken the foot off the gas now. And Palantir consolidating, looks like between 136 and 138. All right, let's go back to the indexes now. And I'm going to zoom out to show the entire session. So this is starting at 6 p.m. Eastern yesterday, and now ES trading below this level that was the previous low, overnight low. That's right around SPX 6018, a combo 2 level. And note the key level down below is the SPY 600 absolute gamma strike. And that is definitely the next target. And net for the day, I started Bookmap today right around 6:30. So this cumulative volume delta starts as soon as the back to the opening on this chart as when the data begins, but the icebergs and stops MBO data start when I open up Bookmap again, which is right around 6:30. All right, so now ES down to the 600 level. All right, let's see what these next levels down below are. All right, so the next level down below is the 6,000 absolute gamma strike. There's the SPX 6,000 absolute gamma strike. And oh boy, I'm not sure if we'll be able to identify a pin today. This price action that's moving it around so much, and there's the price action is so news driven. So there could have been some more news that I'm not aware of that started. So that was started, this move down, recent move down, started just after my webinar began with a reversal from SPX 6050, shown right here, headed down toward 6,000. And right now, again, at the 600 absolute gamma strike and trading lower. Let's see what options traders are doing. Back to the total signal, index signal, and now has started to move sharply lower. Another peak pattern right here, 125, and then a sharp move lower in Hero. So you can see the levels down below here. And note the Spotgamma implied one-day move low, shown right here. That's based on the opening price of SPX today. Opening price, opening print 930. SPX did briefly find support at that level. Now trading down lower. Maybe finding support at 6,000 level. Below that is the volatility trigger at 59.95. Then the put wall down below at 59.75. Let's take a look at Trace. So remember this positive gamma down below between 5,900 and 6,000 should start to act as support. Remember, in positive gamma, market makers need to buy dips. So they buy dips and sell rips in positive gamma. So SPX moving down toward that, and it looks like let's take a look at the levels on this chart. So here's 6,000 right here, and the positive gamma increases or becomes more positive down below 6,000. Oh boy says, yes, keep sliding lower. Let's see what it does at 59.95, 6,000. Yeah, exactly, with that positive gamma. Pumpkin, welcome, glad you're here. Ask, can I look at gamma on gold? Sorry, this tool, if you're referring to this tool right here, is only available for SPX. So I can look at what options traders are doing in gold. It's usually not very interesting. Let's take a look at some of the other heat maps here. Let's go to the charm pressure heat map. So what oh boy was asking about before, pinning levels. So we look for potential pins in areas of blue support below, red selling pressure above. So that would be right here, one of the key levels. And that's right around the 59.75 put wall. Lines up with this potential support level. So that is the most likely pinning or support level based on the information that we have right now. But again, remember, going back to gamma, SPX moving down into the blue support area. So I would look for support somewhere between 6,000 and 59.75, which is right here. And the gamma becomes more positive as price moves lower. We can also see that on Equity Hub. SPX right now trading right around 6,015, so it has found some support. 6,015. That's right around here. So what this chart is showing, this curve is showing that gamma will become more positive as price drops down to 5,900. All right, back to Hero. All right, so it looks like SPX did find support just above 6,000. Now trading at 6,015. Back to Bookmap. So let's zoom in on this. All right, so again, support just above 6,000. So there's a cluster of levels there. That is also the SPY 599 volatility trigger. Just below that, then one other level as well. So right now, we don't know if that was a reversal higher or just setting up another short, another pullback. That's kind of what it looks like now. Setting up another short. Just a pullback. Let's take a look at one other indicator here. I'm going to turn on market pulse price change. So I like to look at this to help confirm entry points in a trend. All right, so far ES now moving higher, continues to move higher. Let's see what options traders are doing. Back to Hero. I'm going to open up another tab here. So we can take a look at the, we'll take a look at the equity signal. Whoops. We'll zoom in on this so we can focus more on recent price action. So the equity signal does continue to move lower, maybe setting up another short. Let's go back to the index signal. Also now flattening out. All right, so just based on the hero signal, this may be setting up another, well, hard to tell. Price continues to move higher. So let's watch price action. So far, trend break, then ES making higher lows. Let's check the larger downtrend. Anybody have any questions, comments? Does anyone have any stocks they want me to take a look at? All right, let's zoom in on this. See if this little trend is going to hold or break. Maybe breaking now. Back to hero. All right, we're looking at the equity signal. Not really supporting along. Let's go to the index signal. Not really supporting along either. Let's check NASDAQ. NASDAQ trying to recover. There were some large traders buying this move down with iceberg orders. Now it looks like large traders continue to make some small buys. Right back to ES. Maybe a little better. All right, so now it looks like that 6,018 level may be acting as resistance. Let's zoom out. Let's see what's below. So remember, stronger positive gamma down at the 59.75 level. Here's the ES, lower daily expected move. That's the ES 59.95 volatility trigger, 6,000 level just above that. And then the SPY 600 absolute gamma strike. Those are all the key levels down below. All right, let's zoom back in. All right, so this little uptrend broken now, resistance at the 6,018 level. All right, last call for questions, comments. All right, everyone, I want to thank you very much for watching. Remember, next week, contract rollover. So on Monday, I will be trading the September contract. And we'll talk about the upcoming week on Monday. All right, everyone, hope to see you then. Have a great afternoon. Thanks for watching, and I will see you on Monday. Bye.